So the next portion, as I told you, is related to calculation of opening capital. Sometimes in question you are given the closing balance of the capital and you need to calculate interest on capital, and interest on capital is calculated on opening capital. So we'll have to go back, okay, because from opening capital what we do, we have added share of profit in that, we have added interest on capital to that, we have added salary to that, and we have deducted drawings from that, and we have deducted interest on drawing. Okay, thereafter we get closing balance of capital. Now we'll have to move opposite, okay, like you used to do in the chapter of 11th standard, that was single entry system. So there also you were calculating capital in the beginning. The same procedure will be followed here, but as you know that partners have two methods of maintaining capital account, that is fluctuating and fixed. So very first I am going to show you how the partners are going to calculate their opening capital, means capital in the beginning, under fluctuating capital method. Okay, very first we'll keep here capital at the end, and we'll do that for both the partners. If there are two partners, we'll make two columns here. Okay, if there are three partners, we'll make three columns there. Okay, so the amount will be mentioned here. Then we will add here what we have deducted. Okay, so we have deducted drawings, and there are two kinds of drawings, and under fluctuating both are treated. That's why drawings against profit and drawings against capital. If any, if both exist, both will be added. If one of them exists, then one will be added. All right. Now, another, interest on drawings. So if interest on drawing is also there, that will also be added, because already you have deducted that. That's why we are going opposite in that. And share of loss, if any, and then whatever the value comes, then out of that we'll deduct these. What we have already deducted we are adding, and what we have added there, now we need to deduct it. Okay, so what we have added here, interest on capital, if any, and salaries, commissions to partner. Okay, if salary and commission has been paid, or share of profit, and again the most important one, additional capital. If any partner has introduced some more capital during the year, so that will also be deducted here. So after deducting, whatever the value will be left, that will be known as capital in the beginning, or you can call it opening capital. All right, so if we start from opening capital, then what we do, more capital added, it is added to that, share of profit is added, salaries added, commission added, interest on capital added, and then drawings we deduct, interest on drawing deduct, if loss is there we deduct, then we reach to capital at the end. But now here we are moving in the opposite direction, that's why opposite treatment has been done. All right, so that is therefore under fluctuating method. If the capital accounts are maintained under fixed methods, so I just show you the format for that as well. So in case of fixed capital method, calculation of capital in the beginning will be done as follows. Very first we will mention capital at the end, and then we will add what we have deducted. Here we add or deduct only two things. One, drawing against capital, and other is additional capital. So that is very easy one. So drawings against capital we have already deducted, so here it will be added, and whatever amount comes we will deduct additional capital from that. Now whatever the value is left, it will be known as capital in the beginning, or you can call it opening capital, because when the capital accounts are maintained on fixed capital method, then capital remain fixed, only two treatments, two changes are done, already we have discussed that. So that is why it becomes easy to calculate in that case. Okay, so now to have comprehensive understanding on both these, we need to attempt some numerical question. So the very first question is there on your screen. So I have written the question here. Let's read the question. Karan and Shreyansh are partners in a business and their capitals at the end of the year were rupees 14 lakh and rupees 12 lakh respectively. Okay, let's focus here. Capitals at the end of the year means these are the closing capitals or the capitals at the end, right? Calculate their capitals in the beginning of the year considering the following information. It means we need to calculate only opening capital, not interest on capital here. That we'll be doing in the other question. Drawings of Karan and Shreyansh for the year were rupees 1,50,000 and rupees 1 lakh respectively. Shreyansh introduced capital of rupees 2 lakh during the year. Interest on capital credited to the capital accounts of Karan and Shreyansh rupees 30,000 and 20,000 respectively. Interest on drawings debited to the capital accounts of Karan and Shreyansh were rupees 15,000 and 10,000 respectively. Share of loss debited to capital account was rupees 40,000 each. Means for both. I have already told you the format of calculation for opening capital under fluctuating capital method, because it is not mentioned here, so it is fluctuating capital method. So without wasting much time, let's make a format here. So here we need to mention capital at the end for both of them. So what is the capital? For Karan it is 14 lakh and for Shreyansh it is 12 lakh. Okay, now we'll add few items over here. What we have to add? Very first, drawings. Okay, drawings of Karan and Shreyansh for the year were rupees 1,50,000 and 1 lakh, and that will be drawing against profit. So let's see the amount there. Drawings against profit. What is 1,50,000 and 1 lakh? We need to add these. It becomes 15,50,000 and here 13 lakh. All right. Now any other item that we have tackled? Shreyansh introduced capital that has to be deducted, so we'll do it later on. Any other item to be added? Interest on capital has to be deducted. Okay. Any other item? Interest on drawing. Yes, this is to be added. So add interest on drawings. What is the amount? Interest on drawing 15,000 and 10,000. Then it comes out 15,65,000 and that is 13,10,000. Any other item to be added? Yes. Share of loss debited to capital account was rupees 40,000 each. You can see in the format these three items were to be added. So 40,000 each. So that becomes 16,05,000 and that is 13,50,000. Now let's talk about the items to be deducted. Okay, so very first the item which needs to be deducted is Shreyansh introduced capital of rupees 2 lakh during the year. So that 2 lakh, that is belonging to additional capital. But only Shreyansh did that, so for Karan we won't do anything. 2 lakh needs to be deducted. Now after this, let's see which another item needs to be deducted. Let's see the balance very first here. So 16,05,000 for this and 11,15,000 for this. Now let's see which another item needs to be deducted. So here, yes, interest on capital needs to be deducted, 30,000 and 20,000. So let's have a look. Any other item is left to be deducted? No, I don't think so. So 15,75,000 and 11,30,000 will be known as capitals in the beginning. Alright, so the question asked only for the calculation of opening capital and we have calculated that. How we have calculated? See, we took capitals at the end and whatever we had already deducted we are adding here, and whatever we added earlier we are deducting. So we are going in opposite way. That's why we could reach up to 15,75,000 and 11,30,000. That was the opening capital in this year for these. Alright, so now this is all for this question. Let's move on to another question. The question you can see on your screen. So I have written the question here. Let's read the question. Kavita and Sarita started a partnership business on 1st April 2018. On 31st March 2019, their capitals were rupees 10 lakh and rupees 5 lakh respectively. Pay attention here. What is the date written? On 31st March 2019, and they started the business on 1st April 2018. So that will be the closing capital. Okay, so by the date also we can recognize. So we need to be focused while reading the question. 6 months ago, Kavita had introduced 20,000 more as capital and Sarita had withdrawn rupees 50,000 from her capital on the same date. Calculate interest on capital at the rate 10% per annum, considering that they both maintain fixed capital methods. Okay, so I have just taught you the format of calculating opening capital in case of fixed capital methods. So let's calculate that. So here we'll mention capital at the end. So that is given 10 lakh and 5 lakh. Okay, and then I told you that we need to add drawings against capital. So we need to see that if any of them has made drawing against capital. Let's have a look. She has introduced, yes, she has withdrawn 50,000 from her capital. Clearly it is mentioned that is drawing against capital. So who has withdrawn? Sarita. How much she has withdrawn? 50,000. So that will be added here. Okay, and what we need to less from here? Additional capital. So additional capital has been added by Kavita, that is 20,000. So this is what? Capital in the beginning. Okay, so Kavita had 9,80,000 in the beginning and Sarita had 5,50,000 in the beginning. Alright, now we'll calculate with the help of these 9,80,000 and 5,50,000. We'll be calculating interest on capital. See, when we are going to calculate interest on capital for Kavita, on 9,80,000 we'll calculate interest for 12 months because that amount remains in the business for entire year. Okay, so she is going to get interest on this amount for entire year, and she added 20,000 6 months ago, means this 20,000 remained in the business only for 6 months. So she'll get 12 months interest on 9,80,000 and 6 month interest on 20,000. Okay, what is the rate of interest? 10% per annum. That is for complete year plus 20,000. So total 99,000 is their interest on capital for Kavita. Understood the case? Now let's calculate interest on capital for Sarita. Now her initial capital was 5,50,000. So we can do it in two ways. Either we calculate 6 month interest on 5,50,000 and then we calculate 6 month interest for 5 lakh. Okay, or we calculate in this way. We calculate 12 month interest on 5 lakh, because if we remove that 50,000, that 50,000 initial 50,000 remained only for 6 months. So she'll be getting interest only for initial 6 months. Okay, and after that 5 lakh remained for the entire year, in the beginning as well as at the end. Okay, in the beginning 6 months or at the last 6 months. Okay, so in that case, so it can be calculated in two ways. I have told you one more time. I just write down here as well. Or on 5,50,000 for 6 months and on 5 lakh for 6 months. Either we calculate in this way or we can calculate in this way. We'll get the same answer. Okay, so we are going to calculate according to first way. So this is the amount of interest that Sarita is going to get on her capital. Alright, so we have seen this question. Okay, now let's attempt the another question. The question is there on your screen. So I have written the question here. Let's read the question. Jack and Jill started business on 1st April 2018 with capitals of rupees 12 lakh and 8 lakh respectively. During the year, Jack introduced rupees 2 lakh to the firm as additional capital on 1st October 2018. They withdrew rupees 1 lakh per month for household expenses against profits. Interest on capital is to be allowed at the rate of 10% per annum. Calculate interest payable to Jack and Jill for the year ended 31st March 2019. Alright, so what capital is given to us? We need to calculate interest on capital here. Nothing else we need to do. Fine, no problem. So let's calculate interest on capital. Fine. Very first let's calculate for Jack. So let's see. Initially Jack had what amount of capital? 12 lakh. And this 12 lakh remained in the business. During the year, Jack introduced 2 lakh to the firm as additional capital on 1st October 2018. Okay, but this 12 lakh will remain in the business for 12 months because they withdrew money 1 lakh per month, but that is against profits. So when the drawing is against profit, that is not going to reduce the capital, and when it does not reduce the capital, so it will not affect interest on capital. While I was explaining you difference between drawing against capital and drawing against profit, I explained that point there in that video. Okay, so pay attention there. So it will not affect. Interest on capital is to be allowed at the rate of 10%. So on 12 lakh for 12 months, and they introduced it on 1st October 2018, and we are doing accounting on 31st March 2019, right? Okay, so on 2 lakh for 6 months. Now let's calculate that. So that is interest on capital will be paid to Jack. All right. Now let's calculate interest on capital for Jill. So Jill had how much capital in the beginning? 8 lakh. Jill introduced any capital? No. They withdrew, but that is against the profit, so it is not going to affect here. So Jill's capital remained in the business for 12 months. So let's calculate that. So interest on capital for Jill is 80,000. All right. So this is the way to attempt the question. I have explained you varieties of question on calculation of interest on capital. Okay, I don't think that you are going to face any problem related to this topic. Okay, so very soon we are going to meet in the another video. Till then, bye bye. Thank you.